Good morning, traders. Welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Thank you so much for joining me here this morning. If you are new to the stream, Bookmap is a software platform that basically helps you understand what is happening with order flow. So that is basically what is happening in real time as changes happen throughout the market. If you look over here on the right side of the screen, you can see this is my Bookmap chart. And basically anything, you kind of see this white line right here. Let me just get my drawing tool up and running so I can show you this. Basically anything on the right of that white line is liquidity. That is what is currently sitting in the order book. So the darker the level that you see, the more liquidity there is at that particular level. And so what we do is we watch how that liquidity changes throughout the day to give us an edge in our trading, to try to predict what the market will do next. Okay. And we're going to talk about that more here in a little bit, but to start things off today, first and foremost, let me just remind everyone that if you have not yet, you can post on social media using the hashtag #FreeBlueJacket. You can post trade ideas using Bookmap. And if you post with that hashtag in X, LinkedIn, or Instagram, you can enter to win a free blue jacket, which I'm actually wearing right now, you guys. Check it out. Check it out. I'm wearing it as we speak because I'm already blue jacket. I'm already there. But anyway, all right. So let's start today by just slowing down for a second, taking a step back and trying to figure out where are we on the chart? Why are we here? What is happening? And what can we predict will happen next? So over the last few weeks, we have been experiencing a lot of balance. If you look at these blue boxes that you see here, these are what we call balance areas. So the ES, this is a daily chart. Okay, so each candlestick represents one day. It was balancing in this range over here. Then we broke out and we started to move higher, and then we started balancing in this range here. And then on Friday, Trump tweeted. And that Trump tweet caused the market to panic and start to sell off. That selling just continued and continued and continued and continued. Okay, that is obviously bearish, because you broke out of this balance area. When we rotated down to the lower end of this balance area right here, so let's call that, somewhere in the ballpark of 68.50, right? When we rotated down to there, that wasn't really that bearish. That's just sort of what we expect. When you re-enter a previous balance area, you expect the market to rotate to the opposite end. Obviously, doing it in one day is a very extreme move, but with the reaction of the news and all of that, we kind of expect it. It's not a shock to see the market get down there. But the question was, from that balance area low, if the market is going to keep going lower, where's its next stop? Where is it going to go to? And the level that we were talking about was this trend line right here. So this was balance here. This was balance here. The balance the market had before that was an ascending triangle right there. Okay. The upper trend line of that ascending triangle is very, very important, because once you break out of balance, you almost always come back and back test that breakout. Okay. In this case, looking at this ascending triangle, back testing the breakout would be back testing that trend line, meaning the market comes back down to it and pokes it at least once more. So on Friday, as the market was selling off and we were continuing lower, we were saying, okay, the next thing we have to do is come back to back test this trend line. We did that over the weekend. What happened when we back tested it? Well, we poked in, so we didn't bounce right off of it, so that's a little bit less bullish, but we poked in and then we reversed right back out. That is bullish, okay? That is a sign that the panic is over. If the market was still panicked today, like it was on Friday, we would be opening today down below that trend line. We'd be back down, around, let's say, in between 6,500 and 6,600. Okay. That's where we would be if the market still had the panic from yesterday. Now, why am I talking about this? Why does this matter? Because what we are always focused on, since we use the auction process as a way to enter trades, we are always focused on where are we in this auction process. So if the market is going up or the market is going down, we're always trying to figure out, is it done going up or down? Is it about to start going in the other direction? The fact that we poked into this area and then came out is a sign the momentum down is over and we're likely to turn around and start coming back up. That doesn't mean I'm bullish right now, intraday. Okay, not at all, because there's a catch. And the catch is stuff that happens in the overnight or over the weekend is much less reliable as market generated information than what happens during the regular trading hours. If this right here had happened during the regular trading hours, so in between 9:30 a.m. and 4 p.m. on a weekday, I'd be as bullish as can be right now. I'd be saying, let me get long and target those all-time highs. I would be so bullish at this moment if that had happened during the regular trading hours, but it didn't. It happened during the overnight. So that forces us to have caution and to say, you know what, maybe the selling isn't over yet. Maybe we do need to come down to this trend line once more during the regular trading hours to give those strong hand dip buyers a chance to buy that dip and to buy that support. They didn't get a chance over the weekend. They were gone. They were at home. So now they're at work on Monday morning, and where do they want to buy? They want to buy that trend line. They want to buy right there. And so the market will give them a chance. It'll come back down to give them a chance to fill that liquidity that they want to fill. So right out the gate, I know I should be a little bit bearish because we probably need to come back to that line, but I shouldn't be overly bearish because bigger picture, the thing that was bearish was the panic, and the panic is over. Okay. So when the opening bell rings in 20 minutes, we are back to business as usual for the market. They have experienced whatever pain they're going to experience. They have panicked out of their positions. And now it is simply a matter of, did this change their minds or not? Did this make people feel they no longer want to hold stocks or not? And if not, if it didn't change their minds, as strange as it seems, we're going to turn around and head right back up to those all-time highs. So we don't want to be overly bearish this morning. Okay. We want to keep that in mind. The other thing I want to make note of, and again, I know this is confusing because I'm like balance area, imbalance area, imbalance area. Okay. This is not normal the way you pass through multiple balance areas like this, but just like this is a previous balance area, the back test of this trend line is a previous balance area. So is this low right here. This is a previous balance area low. And again, the fact that we looked below it on Friday and we are opening above it today on Monday increases the odds of the slingshot move back up to the opposite end of balance. So, okay, Charles, that's very confusing. You're giving us a scenario for the market to go down. You're giving us a scenario for the market to go up. I just want to trade. Tell me where to enter trades. Tell me what trades to enter. Okay, well, first and foremost, when we look at the market profile chart over here, I just want to make note of the fact that I have now put this in 4 tick increments, meaning we're going 1 point at a time for each letter. Normally it's 50 cents for each letter, but because of the size of the range, both on Friday and over the weekend, I'm now in 4 tick increments. Okay, so if my chart looks different than yours, that is why I've switched to 4 tick increments. And essentially what I am focused on this morning is this node right here in the overnight, which we're inside of right now. Okay. This node right here is going to do one of 2 things when the opening bell rings. This is either going to become resistance, in which case we're looking for the market to go lower to back test that trend line that we talked about, or it's not. If this does not hold as resistance, there is no reason on earth to be bearish today because probably the market is going to make a move higher. So quite simply, I would describe myself this morning as bearish below 66.85 and bullish above. It really is kind of that simple. Now, that doesn't mean the market is going to work that perfectly where it just pushes into it and then instantly goes down, or pushes through and then instantly goes up. There might be a lot of chop, a lot of sideways, a lot of grind. They may reverse through that level a few times, but that is very simply how I see things. That As long as we're below 85, we're heading back to back test that trend line. Okay. That trend line is currently at, we'll call it 66.14. Okay. So as long as we're below 66.85, we're heading to 66.14. If we get through that resistance, we're heading back up towards 67.57. Okay. Of course, I know what you're thinking. You're like, but Charles, we're at a balance area low. And we know the market loves to chop and grind and chop and grind at a balance area low. We know this. So couldn't we just have a sideways day where we go nowhere? Yes, we absolutely could. We could have a sideways choppy day. But to me, that is the least likely thing to happen today. Okay. I think the market is either going to head down to back test that breakout that we talked about, or it's going to head back up to start to retrace the move lower from yesterday. I believe the market is going to do one of those two things today. So that's all we have to worry about. Which of those two is happening? And as I said, to me, the resistance at 85 is that level that tells us which of those two things is happening. Okay. And it looks like we're probably set to open right on it, which makes sense because it's the place where people are going to be forced to make a decision. Are they going to go long or are they going to go short today? Are they going to sell stocks or are they going to buy them? And so opening there and grinding through it a bunch of times is a great way to chop people up first thing in the morning. Any questions on any of that from the chat? If you are watching this from the Discord, you can head to the Futures-Charles tab in the Discord. And I just realized I never sent out the email this morning. Too many things first thing in the morning. There we go. I didn't even get to have coffee today. I'm coffeeless this morning, caffeine free. Enjoy. So yeah, if you are watching this from the Discord, head to the Futures-Charles tab and you can leave your questions there. I'd be happy to answer them. We have a question here that says, would you be able to explain your bias this morning and the steps you would take to make this bias? Yes. So that is, that is my bias. My bias is up and down. That is really the way I feel. So again, just to kind of recap everything that I said, from a technical standpoint, the market is saying it's going to go up from here, but it might need to come back to back test this trend line one more time. So if we get resistance, the first move will be down, but then it will likely find support and come back up later on in the day. So I would describe myself as kind of neutral right now and just waiting to see when the opening bell rings, what's the first move the market makes, you know, and believe me, as soon as that opening bell rings, stuff is going to happen. You're going to watch this order flow start to go absolutely nuts because there's going to be a lot of people, you know, institutional money who basically spent the weekend trying to decide how they want to be positioned moving forward. Do they want to be long or short? And so they're going to start entering trades when that opening bell rings in 15 minutes. So there's going to be a lot of change in order flow. There's going to be a lot of contracts flying in and out in both directions. I just want to figure out, are there more longs or shorts? That's my bias right then and there, is just, you know, from the opening bell, is the first move down or up? And then I'll take it the rest of the day, one move at a time. As I said, 85 is sort of the deal or no deal level where things change. It's bullish above and bearish below. Rich is in the house. Good morning to you. Vin is here. Good morning from Spain. Hola, welcome. DNK is here. Good morning to you. Laura in the house. Thank you for the thumbs up. Sheena is here. Welcome, welcome. Jason, thank you for the reminder on the email. It should have gone out now. Will, good morning to you. Vin says, what about the gap? Okay, well, that's a great question. So I have a philosophy for trading gaps, which is a little different than most people. A lot of people think about a gap as the difference between where the market opens on one day compared to where it closed the previous day. I don't see it that way. I always think about it in terms of, are we opening inside the previous day's range? So inside the area that the market was trading on Friday or outside of it. So to me, there is no gap. Okay. And today is a great example of why that's really important to recognize, because the way I read the chart from Friday is that the fairest price to do business, the price where neither longs nor shorts are wrong, is 66.60. Okay. That's the fairest price to do business. So that means if people are going long above there, they're overpaying. If people are going short below there, they're getting screwed. And this is the fair place to do business. So the fact that we are opening today above there is actually a little bit bullish, right? It's not really bearish, because it's a sign that the selling is over, that this was all just panic and fear. The panic and fear is over, and now we're getting back to business as usual. If we just look at the daily chart, what has been business basically since September 16th? It's been up here. It's been business going higher, right? And so if we're back in that place, what is the market probably going to do? It's probably going to go higher. So I'm not worried about a gap today at all. I'm not thinking about yesterday's closing price at all. What I'm focused on is, from here, where does the market go? If it goes down, then it's bearish. Then you could target a move to yesterday's closing price if you wanted to. If from here it starts to go up, though, it's very, very bullish, because that means everyone that was shorting over the weekend, there were people that went short down here. There were people that went short up here. And all those shorts are going to start to get squeezed if this morning we open and we start to press up, right? All those sellers are going to be forced to change their mind. Everybody on Friday that went short down here, they're going to start to get squeezed. And before you know it, the market starts to retrace the move down from yesterday. So you don't want to go into the gate bearish this morning, because guess what's going to happen to you if the market starts going up? You're going to get squeezed. It's going to take out your stops. So you don't want to go into today bearish. That is my opinion. Even though I think the most likely thing is that the first move is going to be to the downside, I need to see that resistance to be willing to enter a trade for it, to be confident enough to get short, because this thing could start to go up and instantly squeeze everyone, and then we shotgun straight to the upside. Okay. And of course, we'll be hanging out here together for that first 30 minutes. So I'll tell you minute by minute what is happening and what my opinion is. And we'll just have to take it for, like that, one step at a time, and see what the market does. That's the only option we have this morning. Massive in the house. Good morning to you. Derek is here. DNK says, can we take a look at the NQ and Bitcoin? Yes, we can. Let's first take a look at the NQ. I have a feeling it's going to be a very large range. Oh, yeah. Can't even get it on the screen. It's so big. I'm going to go ahead and compress down my NQ as well from 2-tick to 4-tick. Which is basically going to mean that each letter represents $4 of price move. Yeah, NQ honestly looks a little bit bullish to me. Let me look at this on the daily. Yeah, I would say the NQ looks a little more bullish. It looks like they're heading up to test resistance around 25,000. Let's get in there and look at the profile. Try to find some resistance levels. Yeah. Okay, so if I had to choose right now what to monitor at the market open, it's going to be this overnight high. around 24.9, we'll call it 55. You see this large node right here on the cumulative? That's your resistance. So if they come back up through that, same thing we just talked about with the ES, short covering. Boop, 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 boop. They start to make a move higher. If they can get above that overnight high, as long as they are below it, I would look for more of a sideways move. So I don't see the NQ the same way I see the ES today. I see the ES as if it stays below 55, as we discussed, it's going to head lower. NQ, I could easily see it going sideways inside yesterday's value area all day today. So I'd pretty much say it's a chop zone and you got to wait it out. Chop zone is overnight high to yesterday's POC. So I know it's a big range and it's hard to imagine the market making 100-point moves or 200-point moves and you not participating. But inside of this range between 24,687 and 24,940, in between this range, it's really anyone's game. It could go up or down and it's probably likely to just go sideways. You start to break the lows, then you're very bearish for continuation lower. You start to break the highs, you're bullish for continuation higher. But inside of here, it's going to be a bit choppy and tricky this morning. Let's take a look at the Bitcoin. Okay. So I would describe Bitcoin kind of the same way in the fact that it's kind of bullish because it came back to back test previous support and it found it, right? The panic is over. All the fear is over. And what did the market do next? It's turned around and started heading up. So that's not bearish at all. So obviously we got serious support here. This area right here, this was the support that broke us out of balance and got us new all-time highs. It was the support that we back tested not once, but twice. And when we made those higher lows, right? That's when we made new all-time highs again. We just back tested it a third time. Okay. So Bitcoin, very simply, I'm bullish as long as we are above 107,362. Okay. As long as we are above there, it's bullish to head back to all-time highs. Now, not necessarily today, but you know what I mean? Just as a swing trade, generally speaking. Now, if it comes knocking at that door a fourth time, it's going to crash and burn. Okay. And we're going to head back to 100. So the bulls do need to turn around and head back up for those all-time highs now, over the weeks ahead. But to me, that's what it is doing. It is turning around and heading back up. The more time you spend trading, the more you begin to learn how panic affects markets. Okay. Panic and fear. Something people aren't expecting to happen suddenly happens and they feel a need to react. If you're walking around in the jungle and a tiger comes out of nowhere, you're shocked and you feel a need to react right then and there and do something to take some kind of action. Now you may turn and run right into another lion that eats your face, right? You might not necessarily make the smartest decision, but you want to make some kind of decision. You want to do something. And so that is what panic is. And that's what we had on Friday. We had panic. That panic is over. People had the weekend. They got to think about it and absorb it and realize it's not really that big of a deal. It was just a tweet and Trump never does anything he says he's going to do anyway. So it's like the panic is over. The thing that was pushing markets lower is over. And so now comes the next step in the process. First, we get the new information and we panic over it. Oh my God, what am I going to do? Then we change our mind. We make a decision. We say either, okay, I don't care about the tiger. I'm going to keep walking my path. Or we say, okay, I got to go the other direction. I got to get away from this tiger. That's what we will find out today in 4 minutes when the market opens. We will find out what is the market's reaction to this, not the panic, but the bigger decision. And if that decision is anything other than fear, the market is going up. We're talking NQ, ES, and Bitcoin. All of them are going up. unless the market opens this morning and we get more fear. We get more selling. So that's all we need to watch for. We just need to say when the market opens, do we get a bunch of selling? You know, do people that manage huge portfolios with billions of dollars at risk decide they want to take some of that risk off the table, or do they not? And if they don't, market will go up. It really is that simple. And we just have to wait and see. We got 4 minutes, you guys, and we're going to find out. Why Kuzna? Murdering that name. I am so sorry. Good morning to you. Marine is here. He says, it's interesting today that the value area is in the value area of Friday. So we are in balance. So we should apply appropriate rules. Yes. I think you're saying since the overnight range is inside the previous day's value. Yes. That's what I'm trying to say is like, if we consider this area here to be a fair price on Friday, opening up on Monday above that level is not a reason to be bearish. You know, now it's not necessarily a reason to be bullish either, but it's certainly a reason to be neutral. It's a reason to say, I don't have a bias. I'm going to wait and see what the market does. Then I'll have a bias. Then I'll enter trades. And since we've had such a large range, both on Friday and over the weekend, we'll probably have a large range again today. You know, the market is probably going to move anywhere between 50 and 150 points today in terms of the entire range. So within that range, let's say it's 50 points or let's say it's 100 points. Can you grab 10 points at some point in the day? You know what I mean? Can you get in a trade and grab a few points here and a few points there? Absolutely you can. You can make a lot of money today, and you don't need to even know right now whether you're going to be going long or short. You don't even need to know right now what are the levels you're going to enter those trades. You just need to know that it could go up or down and what to look for so that once you see it, you can enter the trade. That's all you need to do. And as I've said, I'm keeping it as simple as I can this morning. Resistance below 85, bearish. We go down. New buying above it, bullish, we go up. It really is that easy. And so let's just wait and let's see what happens. And I'll be here to guide you every step of the way. Billy K in the house. Good morning to you. Grizzly Bull is here. DNK says, in my opinion, we will get short covering at the open. Then it goes back down as the big sellers come in. Ooh, DNK. I see it exactly the opposite. Usually you and me are on the same page. I think the first move is going to be down and then it's going to reverse and come back up later in the day. So we'll have to see who's right. That argument that you're making for the short covering that then brings in stronger, longer term sellers, it does make sense, but I just don't see it myself, not with the information on the chart right now. Javier in the house. He says, what is the program on the left side of the screen? It is called Window Trader. It is market profile software. So also known as TPO charts. It's basically just taking a candlestick chart and it's making it three-dimensional. All candlesticks show you is where price went over a given amount of time and how much volume traded during a given amount of time. Market profile lets you see how much time the market spent at each price level and how much volume the market brought in at each price level. So, for example, when we look at this range right here from the overnight, all a candlestick would show us is, you know, a big wick at the high and a big wick at the low, and that's it, right? It would just be showing us where the market went. But by looking at it on market profile, we can see the area where the overnight spent the most time over the weekend. We can see where they brought in the most volume. Well, guess what's going to be support or resistance levels? Those levels, right? If the market starts to push up into it, all those sellers are going to want to defend and they're going to keep trying to sell. They're going to try to stop the market from going higher. But what if the market gets through it? Well, then they're all going to give up on their trades and we're going to get short covering. So by knowing the levels where the most time and the most volume takes place on the price axis, You know what levels to enter trades. You know what levels to watch for changes in the market. And that's what we do. All day, every day, we obsess over what has the market been doing? What levels have they been doing business? What business were they doing there? And then what would happen if those levels change? So when we look at where the ES opened this morning, where did it open? Right here. Okay. So what were these people up here doing? What is probably most of this volume right here? It's probably sellers because they ended up pushing the market down. So what do we know? We know that that's likely resistance, that the market is probably going to push into it and there'll be more sellers. There were sellers there and there and there and there all night long. There were just more and more and more sellers. So there's probably going to be sellers there again this morning. But what if we break through that resistance? Well, then all those sellers have to exit their trades. The auction has just changed. The sellers are no longer in control. The buyers are. Well, what's going to happen? Well, first, those sellers cover. Boop, 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 boop. We get a little move up, short covering, right? Then the market comes back down and buyers step in. We get continuation, or buyers don't step in and we head lower. So by knowing where those levels are, we know what business we want to be doing. We want to be shorting the resistance until it breaks, in which case we want to be long for the short covering. And once the short covering retraces, if there's support, we want to be long for continuation to the upside. And if there's not, we want to be short for continuation lower because we know where that important level is. We can only see that if we can see the market in 3 dimensions. That is what market profile is for. Okay, so I'm watching. There's a lot of big levels of liquidity in here. When we see these big levels that are just sitting here pre-market, and then the market opens and they don't change, that means these are not the high frequency bots. They're the ones that are pulling the liquidity. You see how it's in, it's out, it's in, it's out, it's in, it's out. It's changing really quick. Those are the high frequency bots. But these big solid levels that are just sitting there untested, that's larger players. And those are probably hedges for options trades. So if those disappear at some point, it's really important information. Until they do, they're, support or resistance levels. So support at 66.60, resistance at 67.05. And if they disappear, the market probably heads, in the opposite direction. Good morning to Trader. Remember, if you guys are in the Discord and you want to say what's up, do so by going to the Futures-Charles tab, and you can ask me your questions there. Okay, I would now describe myself as bearish for the next few minutes. Not bearish for the whole day, but the fact that we could not get above 85 is a sign that the sellers are still in control. It is a sign that the first move is going to be to the downside. So we are now watching for resistance. We have a node right here, just above the opening price, around 67.70. If that holds as resistance, the market should head lower. Okay. If not, if we pass back through it, I'm back to neutral and watching for resistance at 85. Okay. So bearish right now. And we're watching this large node right here around 66.60 to see if it disappears or if it fills. If it fills, it's support. If it disappears, boosh, we crash through. It's actually at 66.61. Javier says, how do you know that they are sellers and not buyers? Okay, well, this is going to sound like it's overly simplistic, but this is really how markets work. All right. Every move that the market makes is based on the liquidity available right then and there at that second, at that moment. Okay. So if, this is happening too fast for me to explain it, but so we're at, 66.70. If we're going to go up to 71, there has to be more buyers at 70 to push us up to 71. If we're going to go down to 69, there has to be more sellers at 70 to push us down to 69. Does that make sense? So it doesn't necessarily mean bigger picture there's more buyers or sellers. It just means, anyway, speaking of which, we're testing resistance right now. Does this hold at 72? If so, we're bearish for continuation lower. If not, we're neutral. So, more sellers, market goes down a tick. More buyers, market goes up a tick. So if you see a particular level where there's a lot of volume that traded, right? And you're trying to figure out, was it more buyers or sellers at that level? You ask yourself, where did the market go next? Did it go up? Then it was more buyers. Or did it go down? Then it was more sellers. The fact that at one point in the overnight, the market was up here, but by the time the overnight was over, which was the market open this morning, it was down here, tells us there were more sellers up here than buyers. And so I can actually expand out the profile and kind of show you step by step. Yeah, so there you see. Okay. So they were able to poke up there. First, they had resistance and they broke through, so they got short covering. Boop, 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 boop. They squeezed all those sellers from right there. And then when they came back down, what did they get again? Resistance, selling. They tried again, resistance, selling. So what did the market do? It went down. So there were more sellers above that level than buyers. And again, why do we want to know that? Because where do these sellers have their stops? Right here. Where do these sellers have their stops? Right here. Where do these sellers have their stops? Right here. So we want to know where those stops are, because if the market comes back up and it passes through those levels, we're going to take out those stops. If they are sellers, that's what we call shorts covering. Okay. So what is short covering? It is a move up very, very fast. Well, what happens when the market does that? It's chopping around, it's going sideways, it's uncertain, and then all of a sudden it gets through a level and it starts to go boop, 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 really fast. What does that do? It starts to change people's minds. They start to get bullish. So then you bring in new buyers. So we're always asking ourselves, where are these important levels where things change, where we can take sellers and force them to cover, turning them into buyers, where somebody who's neutral might decide they're ready to buy. Okay. So for example, for me, when the market came through the opening price earlier, I became a seller. I became bearish. When it pushed into resistance, I enter my trade. So now where's my stop? Probably above the high of the day. So I'm going to stay short as long as we're below the high of the day. But if the market comes back up, I'm going to be forced to be a buyer. I'm going to be forced to cover my short. That's the way we want to think about markets all the time. Where are those levels? Because that's the best opportunity for day traders, is to know where those levels are and to observe what happens at those levels. That's what the TPO is for. Let's take a quick look at the Q. Yeah, Q's chop zone. Good morning to Izzy, Pete the cat, Percy, TY. TY says, if it disappears, referring to that big node of liquidity, if it were to disappear or pull, doesn't that mean it's easier for the market to move through in that same direction? Yes. But here's what happens sometimes. So high frequency bots, they use order flow as a reason to enter trades. So let's just say, a high frequency bot were to choose to go short right now, right? It's trying to figure out, where do I take profits on that short? It's going to be targeting that large node of liquidity, right? So let's say the market starts to push down, and then before it gets there, they pull that liquidity and it disappears. Well, what are those high frequency bots going to do? They're just going to exit the trade instantly because they no longer have that target that they were targeting before. So by disappearing, the market can actually reverse. But you are right. Sometimes it comes crashing through. Sometimes, if the market gets right up to it and then it disappears, then it's just like, and it just goes much lower. So when it comes to these liquidity nodes, you can't get too stuck into the idea that they are going to do this or that. You more just want to pay attention to when something changes. When that liquidity disappears, you may not know if it's going to crash lower or it's going to reverse, but it's going to do one or two. Something's going to happen at that moment. So you may enter your trade or exit your trade because that liquidity suddenly changed and you see it as an opportunity. All right, so I am no longer bearish on the ES. We are now in a chop zone, both markets. And I just mean back to neutral over the next few minutes. Remember, bigger picture for the day, I'm bearish below 85, bullish above it. But sometimes in that first hour, they got to chop around. Choppity, 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 chop. Get everyone long, squeeze them. Get everyone short, squeeze them. So let's talk about liquidity. What just happened? Market was going up, and then they started to add liquidity above, right? We see that happening more and more. So what has happened as they're adding more liquidity? Markets stopped going up and started going down. So right now, this is acting as a magnet that's pushing price away. If it suddenly starts to disappear, which again is happening right now as I speak, if we get less and less liquidity, it turns around and comes back up. So if that were to suddenly disappear, what's market probably going to do? Going to go up. Still neutral for the next few minutes. What do we see here? Market starts to come down. What do? Add liquidity below, trying to scare market back up. They're trying to get us to chop around in here to get everyone long and get everyone short so that whenever they break one end or the other, they can squeeze them. Now they're adding liquidity at the high, try to scare it back down. More chop through the opening price. Marg says, isn't the smaller nodes the best place to buy since large nodes usually don't reflect the good lower prices? The small nodes are the roads less traveled, whereas the bargains are. Okay, well, I assume you're talking about nodes of volume, not liquidity. Liquidity being orders that have not filled yet, as opposed to orders that did fill, which is what volume is. So the way to think about low volume nodes versus large volume nodes is that large volume nodes are going to slow the market down. They're going to be support or resistance. They're going to be a place where two-sided trade takes place, whereas smaller nodes are going to be places where the market can pass through very quickly. So let me just zoom out here and give an example. So like, if you look at my cumulative volume right here, this is an area where the market is going to come to a screeching halt and get two-sided trade. So is this area up here. But it would be pretty easy for the market to move from here to here, right? That would be pretty easy because there's less volume in between the two. So if we look at last night's overnight range, you know, this move from here to here was an hour and a half. They made that big move, right? After spending, you know, the whole night grinding and grinding and grinding and grinding and grinding, they were able, once they broke away from this big node, they were able to get to the next big node. So when you say, are smaller nodes better places to enter trades? I would say no. By the time you get to the smaller node, you already want to be in the trade and targeting the next one. So for example, let's say today the market were to go up. We got this large node. It's right about where that overnight high is. So let's say the market were to push up. It's going to get some two-sided trade in there. There's going to be some chop. There's going to be some grind. That's where you'd want to get long if you're getting support up there, because it'll very easily go from there back up to there, right? Which is the next big node. That move will happen very easily. So if you get support here, you want to get long because you're going to make that move. Well, what if you don't? What if you push up there and you're grinding around and it actually becomes resistance? Well, that's where you want to get short, because then the move back down to the next node will happen pretty easily. So the large nodes are sort of the best place to enter the trade, whilst it is always difficult because it grinds and grinds and grinds there, right? But in terms of the best place to enter, if you can handle the grind, if emotionally you can handle the market making a move, then that's the best place to enter. Now, if you can't handle the emotions, if you need to enter a trade and then have it instantly work out for you, then yeah, the lower nodes are the better ones. Because, you know, either way, let's say we're looking at the lower node right here. Okay. Whoops. Hold on 1 second. Let's say we're looking right there and we're saying that's where we want to enter the trade. Well, if you go short, it's either going to be you get short and it instantly works for you, or you get short and you get stopped out right away. If you get long, again, it's either going to work for you, you get long, it makes that big move and you're in it, or you get long and it comes back down and it stops you out right away. You're probably not going to spend a lot of time in there, right? And so if you're not spending a lot of time, you don't have to stress for very long. The trade either works or it doesn't very quickly. But those are not the best location to enter the trade. Because if you're entering the short there, you're gambling. You're guessing it's going to reverse when you have no reason to assume it will. And if you're going long, you're chasing the trade. You really should have bought support earlier, and now you're chasing the momentum. And so to me, that's more of an amateur thing to do, right? To try to limit the difficulty stress-wise on yourself, and as a result, giving yourself worse entries for trades. I always think it's better to get the good entry and just deal with the stress of the grind and the grind and the grind than it is to chase price. But everybody's on their own journey and everybody has to figure out what works for them. So what just happened as we poked into 85? What can we see? Stops. You see that? 77 stops at 83. 42 stops at 84, right? So as we just talked about this. If this level breaks, what are we going to start to do? We're going to start to squeeze sellers from the overnight. We're seeing that happen. So that is actually a little bit bullish. It increases the odds. We're about to get a little pop to the upside as we take out these stops. Look, we just took out another 116 stops. So that means we're going to make another poke because there's more stops. So this is now becoming bullish to head up and test the resistance at 66.97. This is lower volume. So we can get through here from here to there pretty easily as we just boop, take out stops. Boop. Trevor in the house, good morning to you. Jitsimij says, do you trade the NQ? I don't personally trade the NQ. No, I do not. I will not do it with green eggs and ham. I will not do it. Yeah, it's just too volatile for me. It's too fast, the moves. There's not enough time to kind of sit and think and decide. A lot of times, once the NQ breaks a level, it just goes. And so you really have to be able to anticipate those breaks much faster. Whereas the ES tends to kind of come back to levels a few times and give you a chance to really make sure, do I want to be long? Do I want to be short? So I tend to prefer the ES to the NQ. But there's lots of traders in the brigade that trade the NQ, and they prefer that volatility. They prefer that speed of change, but not me. Okay, so we know the market wants to head up and start taking out these stops above 85. So now what we're watching for is support. Can we turn 66.77 into support? If we can, we turn around and head back up. Okay, so we need to take out more stops here if they want to keep this momentum going. So we're watching Bookmap for that stops indicator. Those will, of course, be shorts that are covering. Okay, so now, right now, you know what this is reading like? Like DNK is right. He predicted the first move would be short covering, which larger players would use to absorb the shorts that are covering so that they can get short. As those people are going long, who's accumulating that liquidity? Somebody that's going short, right? And if we look right as we're pushing into the area where we should be taking out stops, right? This is right where we should be boop, 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 boop. Just like taking out stops, no problem. What immediately starts to pile in there? Icebergs going short. Well, that's a weird spot to go short, right where stops start getting taken out. But look, iceberg, iceberg, iceberg. So somebody is accumulating shorts here. And they're squeezing the sellers from the overnight and taking their shorts as a way to do it. There we go. Little stoppage. This increases the odds in my mind that this area around 6,700 is going to hold as resistance and send us back down to the halfback. Volume is tapering off. Okay, pour high, so we know we're not done. We need at least one more poke to the upside. But somebody is accumulating a short position here. More icebergs going short. Right where the stops should be. More icebergs going short. If you use the ticks as a way to kind of figure out what's happening with the market, this would be a great moment to look at the ticks and figure out, are they going to go up or down from here? We've got taper in volume, so we're running out of volume. We got lots of sellers piling on with icebergs. So our question is, are we about to reverse and come back down? If the ticks start to go down, then we are. If not, if the ticks turn around and start going back up, we need another poke to the upside. Let's see what happens. Okay, we're looking for potential bounce here at 85. Do the buyers step in and defend? Or do the sellers remain in control? All right, we're getting that bounce. No questions from anyone in the Discord? Discord's like, nah, we're cool. We just like to stand in the corner and listen. We don't want to say shit. Marg says, so we just saw that the more times a touch happens and hangs around at a level with the high yellow liquidity on the heat map, the more chance it's going to break through and go up, correct? Yes. Yes. So anytime you have a support or resistance level, any kind of support or resistance level, the more you poke at it, the more likely you are to poke through. So it's kind of like if you, let's say you have a resistance level, you want the market to poke it and reverse and come back down. That's great. You have resistance. You know, market pokes it again, reverses and comes back down. Great. You have resistance. But by the time you get to that third poke, that one's less likely to hold. If it does, and then you turn and have a fourth poke, that one's really less likely to hold, and so on and so forth. And you can see that if you're using these large liquidity nodes in the Bookmap over here, as your support or resistance levels, you'll literally watch those orders disappear. So as it pokes into it, one of two things happens. Either it starts to fill, which makes the liquidity disappear because it's getting filled, or they pull it at the last minute, which makes it disappear. And so if it fills, that's going to be resistance. You're going to get a push away. But if you come back again, there's less liquidity there to fill the next time. So it's less likely to be resistance the next time. But if it pokes up and they pull it, well, then it's not resistance anymore. It's just nothing. And they do pull it a lot. They love to pull. So one thing that I always pay attention to when the market is going up because of short covering, which is what's happening right now, the question I always ask is, when will this short covering end? How do we know when the short covering is over? Well, it's when we stop taking out large stops. So one thing that I use Bookmap for with the stops and icebergs indicator is I observe, as the market is pushing higher, does it keep taking out stops? So on this first push up, we took out some stops. It pushed up again. We took out some stops. We pushed up again. We took out some stops. We've been continuing to take out stops with each new push to the upside. But this time, right now, is different. This time, we didn't take out any stops up there. See that? No big stops taken out. The last one was right here. It's kind of hidden behind the other one. But the last big order of stops was right here. So that tells us the short covering is over, right? The squeezing based on short covering. So now, if the market's going to keep going up, we need new buying. We need to see support hold. What was the last support? We had it marked before we got there, 85. So if that breaks this time, we don't have new buying. We can't keep going up. So the last potential support that could hold the market, in my opinion, is 66.77. Okay? If that holds, great. We'll take another poke to the upside. If it breaks, we're going much lower. Let's see what happens. The buyers are back in control, but they got to bring in more buyers and more buyers and more buyers if they're going to keep this market going up. We can also look at the ticks. Do the ticks keep going up or do they start going down? Buyers are defending. It's bouncing on the zero line. But if it starts to break below that zero line, it's over for the buyers. So I am bullish above 77, bearish below. Or to give it a little breathing room, I'd say bullish above the opening price, bearish below. Any final questions for the pirate before we say goodbye? John says, what about the massive gap below? There is no gap. Wade says, you're very good at stating what happened. Well, stating what happened is how you make predictions about what's going to happen next. Okay? So rewind the stream. Look at where I put the levels. Look at the arrows that I pointed to. Okay? Where support and resistance would be. Watch what the market did there. Imagine you were putting your orders in there. You were going long at support. You were going short at resistance or taking profits on your long or whatever. And suddenly you'll start to realize, wow, being able to recognize in real time what is happening gives you an enormous edge in predicting what comes next. So as I've told you, if we come back down to 77 right now and we find support, I'm bullish that this thing is going to keep going. If not, I'm bearish that we're going to sell off. So take that information and do what you will with it. Okay? Now, when the market comes back down, people that are in the Pirate Traders Brigade will hear me talking about it. I'll be saying, okay, here we go. We're pulling into support. Let's see what happens. I'll be talking about it in real time. I'll be saying, oh, look at what happens with the ticks. Do they go up or down from here? Yeah, I'm going to be talking about it in real time. But 30 minutes ahead of time, I told you about it. And then in real time, we're just observing what's happening. We've already made our decision about what we're going to do. Right? I'm either going to be going long there with the support to head up and test the overnight high, or I'm going to be going short as we pass through the opening price to test the overnight low. That's it. Long, make money. Short, make money. Interim, watch and wait and discuss what's happening. That's what trading is. If you've been enjoying my commentary and you've been finding it helpful, you might consider joining the brigade. There is a link at the top of the screen, piratetraders.io/join. It costs $20 a month, and I do this live stream every single morning where I tell you what I think the market is doing and what is likely to happen next. You get access to all the tools that I use by just looking at my screen. And so I hope some of you will join and come hang out with us in the private community. Thank you guys very much, and we will see you next time. If you are in the Discord and I missed any of your questions, I will go in and type out those answers later on. Otherwise, I hope everyone has an awesome day. Bigger picture, I would say now it is bullish to at least try to get to the overnight high. We would need new buying above the overnight high to keep that momentum going. But it would be bearish if we cross through the opening price. Okay. We talked about two things that could lead to a sell-off today. The first was the accumulation of shorts. They used this area here to get short with size. We saw lots and lots of icebergs getting short in there. Now, we don't know if those were longs taking profits or new shorts entering the market. So, that doesn't necessarily guarantee the market's going to go down, but it is worth observing, right, and being aware of. The other thing we know is from the market open, right, where have we spent most of the time today? Where have we brought in most of the volume? Just look at the daily profile. That's your opening price. Where was most of the time in the volume? It was above. So that means a majority of the players right now, intraday this morning, are long. So if we come through that opening price, that's where you get liquidation. Liquidation is forcing longs to cover. That's stopping out the longs. So it is bullish unless we cross through that opening price, in which case it becomes bearish. And you say to me, well, Charles, I don't like that. You're saying it could go up and down and up and down and up and down for hours before it does its thing? Yeah. Suck it up, Buttercup. That's what trading is. Sometimes the market will grind and grind and grind and grind. And all you can do is take it one tick at a time. That reading right now is bullish unless we cross through the opening price, in which case it becomes bearish. Okay, thanks. Bye.